Hello everyone, welcome back to our YouTube channel, The Hajj's Academy. My name is Jazzy and you are watching today learning course for the IDR and DR strategy. What is DR and IDR? I'm gonna talk about it today, and for on the request of our premium members of Discord group, I want to make it clear that this strategy is useful if you know your bias, if you know your levels, and if you are well aware of your risk management. If you are not focusing on money management, risk management, on your leverage, on your positions, then this strategy is not for you, because this is something related to the intraday trading. Okay, and this is something useful to know the bias, to know the profit taking targets, to know the high of the day and the low of the day, so basically, in this video I'm going to tell you how you can scalp the New York session with the help of this algorithm, and it will be helpful for you for extended targets for your trades. If you are in a long position and you are scared that it's gonna reverse down towards your entry point, or your profit gonna shrink because you are not well prepared for your targets, then it can help you out to know the bias of the day and where you can take partial profits. It's gonna help you in this method. And also, I want to state that this strategy never applied on the event days such as FOMC, CPI, and other, employment rates and stuff like that. So if there is any kind of a volatile event, news conference, anything like that is coming, then this strategy is not applied, and I won't recommend to use it on these days, because the failure of this strategy can take place. So better to just avoid these days. Instead, you look for every day for this trade. Okay, let's do this now. As you can see, this is the New York session. This strategy works best with the S&P 500, Nasdaq, and some stocks. Also, this applies to BTC chart, because BTC has been listed to CME and EDF. So the algorithm refers to ICT teachings, Inner Circle Trader. As per the guy, he made this strategy basically because of this algorithm that has been traded and controlling the price during the sessions. And New York is the best session, most effective to take a trade based on IDR and DR strategy. Okay, this is starting for the 9:30 towards the 10:30. That is your New York session. 1 hour after the session, you will be know the levels of DR and the IDR. Okay. First, I want to tell you about this indicator that I'm using to mark these levels automatically. Okay, these are my settings here. I'm not using the standard deviation right now. I'm just doing it manual, and I will teach you how to do this. Right now, this RDR and ADR and ODR is important for you to know. That RDR is 9:30 and 10:30. That is your first DR level, and this is known as New York session. That is ADR timing. That is known as Asia session. ODR is known as the London session. Okay. So let's don't try to play with these timings. It's just by default setting. It is okay. Okay, now on the 5-minute time frame, you can see here it automatically marks the DR high here. You see, this is our DR high and this is our DR low. The defining range, and these are the defining range, and this red dots you see here, the line, this is called implied defining range, and that is starting from the body of the candles, not the wicks. Wicks are high and low of the session, and the body is the body opening and body closing is your implied defining range. So you have marked your levels now successfully. The mid of this session, as you can see here, the thin line, you see, this one is your 0.5, the mid and you can say equilibrium of this range. That will help you out in future for trading, such as acting as a support and resistance based on the bias. If the bias is long, and if the bias is short, you can take your confluences, take your levels to trade for the entry purpose from these points. I will let you know how to do this shortly. At the moment, the important thing to know is first advanced tip, that when this whole 1 hour IDR has been set, now you need to know on 5-minute time frame, for example, like this, you see that has been protected. Okay, the body 5-minute body is not closed above the DR high at the moment. Okay, now once you see, at least on the 5-minute time frame, at least, okay, below 5 minutes is not validated. 5-minute time frame, at least close the body of the candle above the IDR high and the DR high. That is your confirmation of this 80% confirmation that DR low is being protected throughout the session. This session, okay, you need to mark this. You need to note down these things in your journal. Okay, now you know the direction is to the upside, okay, for the potential targets. What you are going to do, the tip number 2 is, you need to find your entry point to ride this trade. Okay, now you need to plan your trade accordingly. As you have seen that the bias is for the long. Okay, one more thing is really very important here, that you have to find the trend. Okay, first you need to see the trend. If the trend is upside like this, the price is doing something like this from the lows. Okay, you see price is following to the upside, making the higher highs, higher lows. That's you know that bias is uptrend. Okay, price is an uptrend, and for the further continuation to the uptrend, for further continuation to the upside, you are using this strategy. If price is downside trending from making the lower lows, lower highs like this, then you can anticipate that the trend is to the downside. Okay, and now if vice versa, if this is taking the lows, for example, if it's taking the confirmation of this 5 minutes time frame, closing body closing below the DR low, then you will be confirmed that the trend is already downside and more downside targets is going to happen. Okay, so right now the trend is to the upside. And please avoid this stuff like this, the sideways. When price is doing sideways stuff, do not trade. Like kind of avoid this choppy range, and avoid this DR strategy into these type of range. But when you see the trend is clear to the upside and clear to the downside, then you are good to go with your trades for the intraday scalping. But if you are in a choppy range sideways, then try to avoid this, because this strategy has been followed by top-notch traders, and they have a lot of confluences, a lot of data, well-informed decisions to know where the breakout is coming towards. Okay, so probably if you are a beginner, probably you are not going to make it on the choppy sideways range for this DR strategy. Okay, so now the trend is clearly to the upside, and we have taken this prices has been taking this DR high. Now you need to find your entry point. Okay, so I'm gonna mark this 0.5 here, like this Fibonacci retracement. I'm gonna mark it from the IDR high in implied defining range, this red one from the bodies here, and you will take this above IDR high as well. Okay, like this. Now this is the standard deviation Fibonacci levels, and these are the settings, as you can see here. These are the settings. You can copy these settings in your Fibonacci retracement levels, and you can put all of these variations values and save as STD. Okay, and after saving, you can easily use this without any hassle. Okay, now you see our 0.5 is here. Okay, now I need to find more confluences such as fair value gaps. Okay, now if you are really bad in marking the fair value gaps, you can use an indicators, such as if I have like not here, you can open the indicator from here, like this one, super order block FVGBOS tools by this one. Let me just close some of the other yeah. You can hear. Now you see, if you are really having bad times and really tough to find the order blocks and confluences, then you can use this this indicator for your support, for your help. Okay, use the indicators for your help, not for do not depend on the indicators fully. You need to do manual stuff to understand how to do technical analysis. Okay, now you see here the fair value gap we have. Now you can mark this fair value gap. Okay, now you see any other confluence you have? No, not much in this session. So right now we have fair value gap here and the 0.5 here. Now just close this indicator now, and use this golden pocket technique to find the highs and lows and the golden pocket here. So I see the golden pocket is coming at the same level here for the fair value gap. So this is my high probability trade to take, because I know the 80% confirmation, well-informed decision that IDR has been taken out and the price is going to upside, and lows has been protected. So now the next step is you have to mark your risk management. I'm gonna take the stop loss to the ticks below, 2 or 3 ticks below the DR low. This is DR low, so I'm just gonna take the 2-3 ticks below here. For example, 7711. So I'm gonna take it 698, 685. Yeah, this is good. So this is your entry point here to this fair value gap and this golden pocket. Uh, Sometimes it happens that price comes down and front run this levels. So you need to be patient. Okay, you need to be patient. You need to find the accurate entry for this intraday trade. If it front run, you can scoop it up from the other candle. Okay, like this. You don't need to jump on the gun here. Like it can do something like this as well and take you out towards your entry point. So your entry will be here and it will be bad entry. So you need to be patient and you need to see what is price is doing at the moment. Okay, I will show you. Now you need to set your targets, what you are targeting right now. Either you are targeting a DR high or you have confluences to the upside. Now the third tip is really important for you. Using this standard deviation Fibonacci that we just pull out from this range, it will help you to find the targets. Now you will be asking me, there is too many -1, -115, -2. How are you gonna know this? What is the best level to take the profit? Okay, so the best trick for the beginners is you need to find the buy side liquidity and the sell side liquidity along with the fair value gaps, order blocks and stuff like that. Okay, so what I'm gonna do, I'm gonna find a sell side liquidity. I pulled already the range tool from volume profile from the lows to this point, and I find that there is the POCs coming over here. So I'm gonna mark my levels first. I mark this POC here. Okay, I mark this buy side liquidity at this point. Okay, and this is value area high as in marking as well, just in case. Okay, but it's not necessary because buy side and buy side liquidity, BSL, and the value area high is also combined with each other, so it's not necessary to mark, but you can mark it as well. So this is POC also. Okay, now you see there is any fair value gap or any like for example the order block here. So you're gonna do the same, like using the indicator here. Now this indicator is showing me that there is no such fair value gap or stuff like that happening there. So to make it more prominent, you can you use this setting, raise the color if you are having trouble in spotting out, so you can raise the color, tweak the settings. Now you see, let me just, okay, so now you see here is the order block. I'm gonna mark this as well to maximize the area of interest. Okay, now I do this. You can extend it to the right side. Okay, this is your possible potential resistance, the 5-minute order block. You can mark this as well, but it has been taken out here, the mitigation. So I'm not gonna take the mitigation point right now. Okay, I'm just gonna take these, right? And yeah, this is the untapped order block right now, untapped liquidity. So I'm gonna emphasize on this one. There is the fair value gap here as well. So let's see. Okay, so right now I'm gonna increase my target towards -2 here. You see -2. I'm having buy side liquidity. I'm having value area high here, having POC here, and having the order block here. So this area basically is the area of interest. So you need to take profit in this area. Okay, when price comes above to your marked area. So like this. Okay, this is your area of interest. Regarding this, my -2 is the standard deviation that I'm targeting right now, 1.5 and 2. Okay, now just remove this indicator now, and let's see what happens next. Now you see here the price is respecting the 0.5. So what you need to do, if you are confused and if you are fear of missing out, you can take partial entry. You can take entry 1 and entry 2. Okay, plan your trades really smartly. Okay, entry 1, entry 2. Okay, now let's do this. Okay, it comes to the fair value gap. Exactly bounced above, taking the fair value gap here. Okay, this is your entry point. You can completely see that it front run the Fibonacci golden pocket. Yes, we marked it really correctly from the wick low to the wick high, but you can clearly see that it's been front run. So basically fair value gap was your area of confluence to take this trade. Now you see here you are completely out of water right now. You can place your stop loss at entry for risk-free trade, like 0% risk involved if you put your stop loss at entry point. Okay, now you see here 0.5 is acting as a resistance right now, but as we already know that DR low has been protected, so we are absolutely fine, and we are not worried enough until and unless the price is not going below the 0.5 and the fair value gap of our entry. Okay, it's consolidating above the you see here the DR high. This is your sign of strength. That is, it's acting as a resistance, acting as a support, the resistance zone, and that is your your best confluence and best information that you can have, that the breakout and then retesting as a support and coming back up. Okay, now you see here the target has been done exactly to the dollar. POC has been taken out, 1.5 has been taken out, the standard deviation and the order block exactly. Now you need to take profit here. The profit taking is really necessary. If you are not taking profit and you are anticipating for more upside, then you are not a good trader, because once the trader is not good enough to take profit, it's not good enough to trade. Okay, so what is your let's just see from this entry point towards our take profit. It's 4.5% trade. That is huge. It's like a swing happened here. The swing trade happened here for you. The scalp is almost like 1% or under 1%. But this trade is above 1%, and that is a huge profit for you. And you plan the trade, and you find the uptrend, and you find the DR strategy, and that is your confluences. That is how you're gonna plan your trade. Okay. Not every trade is about. Not every single trade is meant to be take. You know, you don't need to take every single trade on DR strategy. What you need to take is the high probability trade based on the DR strategy. If you see that this is an uptrend, price is forming higher highs, higher lows, market structure is intact, now you find your confluences at the entry point and at the exit point using the standard deviation method as well. Okay, rejection, 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 rejection. uh, okay, now the session has been end here. You see the session ending time, I'll show you. This is 16. This is your session ending times. Okay, so you know that your session has been end and you have already been taking profit here. So this is the beautiful way how to trade the DR and IDR strategy. Okay, you need to find your confluences, you need to find your levels, you need to plan your risk management, you need to plan your risk reward ratio, which is 4.89. You need to place your stop loss at the lows of the DR, the DR low to some ticks like 3 or 2 ticks, or you can just take it more to the downside as per your risk appetite. If you are you can risk more and you are okay with that, then you can raise your stop loss. It's up to you. Okay, I just give you this standard method to use the risk management here. And one more thing I want to tell you, that when you see, for example, if price is taking your targets and finding support at 0.5, like 0.5, then it's another trade for you. But right now I see the price is not respecting the 0.5 here. Okay, it's not turning the support and resistance like this. Okay, so what you need to do, you need to just take profit and go home. You don't need to do anything else. You are not supposed to take another trade for the short. Okay, if you are a good trader, if you are for example, if you're a professional trader, you already know what you have to do. You can already take this a trade from this order block, and you will be in double profit, long and short. But if you are a beginner, then I would like to tell you that please stick to simple method and don't overexpose yourself to unnecessary risk. Okay, once you become a professional trader, experienced, practice, then you will be able to do these type of stuff. Switching back and forth, longing then shorting, then longing then shorting, maximizing your profit, maximizing your day trade, going home back with a lot of cash in hands. Okay, simple as that. So this is all. As I told you, this is vice versa. You can take this strategy in the downtrend as well. You have taken this in the uptrend right now for the long bias. You can trade this strategy in the downtrend, similar to this practice, same as it is. Nothing else has been changed. Find your confluences, plan your trade, find the entries. Okay, you can also one more thing I want to add here. You can also use. Let me just delete all of these things first. You can also use the optimal trade entry Fibonacci from the ICD teachings, such as like this OTE. Okay, you see OTE also respected here. You see, to the exact dollar, that has been respected. This is your 3 entry points, 1, 2, 3. And you see it has been respected. If you want to know the Fibonacci levels, I can just show you. These are the levels for the OTE Fibonacci settings: 79, 705, 618. Okay. Yeah, slightly here. But still it's front run. But you can use it for more confluences if you want. Okay. Optimal trade entry gives you the target as well. You see 1, 2, 3, three targets. Let me just close this, and you will see here 0.27 minus 0.62 deviation and -1. These are all of your three targets for the day trade. And now you see here, based on the OTE settings, your all of the target has been done. But if you find your more confluences, like we scratch it from here, then you can do extraterrestrial trading. You can do really awesome trading. You can take profit exactly to the dollar, and it's really important to mark your buy side liquidities. Like you can use the indicator as well here. I have Paul Dynamics. Let me just give you an overview for this indicator as well. Paul Dynamics, DR and IDR Auto Trader. What you need to do, you need to simply tweak the settings here. Close everything, close everything, close everything, close everything. I'm just only using it for the BSL and SSL. It will give you the automatic mark here, the levels of the SSL and the BSL. Okay, 15 minutes, 1 hour, 4 hour. It will not mark the levels on 5 minutes. So 5 minutes you have to do it manually. You can change the colors and the text colors as well to white if you are using a black background. So you see here, really concise and very to the point and precise. Buy side liquidity here as well. The 5 minutes buy side liquidity that we just marked, and it's not coming on our charts, on our indicator right now. So just you see here, buy side liquidity, POC, then your order block. So it's really easy. You need to just find your uptrend and downtrend. Avoid the choppy range for the deviations and for the IDR strategy. And remember, this strategy is nothing you can rely on. I don't want you to depend on this strategy. You are not supposed to depend on this strategy. You need to use it as a supportive medicine, to your trade. If you are only relying on this strategy and you are not following any of other teachings, such as you don't know anything about fair value gap, if you don't know anything about order blocks, and if you don't know anything about golden pockets, Fibonacci, and other strategies, then this IDR strategy is not for you. Okay, 20% is still having the room for the failure in this strategy, because this is 80% probability trades. 20% is still out there for you to fail. So if you are not a intermediate trader, if you are not a professional trader, and if you are a very noob and very beginner trader, then this strategy is really dangerous for you. You need to practice. You need to practice with paper trades to use it in your research. Okay. And one more thing, that use it with the don't use it with the altcoins. Okay, use it with the regulated market, such as stocks, indexes, S&P 500, Nasdaq, CME charts, CME, BTC, USDT. So you need to use it with the regulated assets, cryptos that has been listed on CME, and financial, like smart money, institution smart money has been playing with that. So these algorithm works best with these type of stocks, assets, and cryptos. But if you are playing it with some pump and dump coins, such as shit coins, Jasmine, and etc., then this strategy is not going to work on that, because that's kind of degenerate stuff. And you know that the pump and dump coins are not regulated, and they are controlled by the bad guys, you can say, those who are looking to grab the liquidity and take the money out of the retailers' pockets. So you need to be focused, and you need to find some neat and clean picture and charts for that purpose. Okay. I will see you in the next video. If you have any question, you can ask in the comment box. And also, if you have any question, you can join our Discord group. And in our Discord group, you can ask as much as questions as you have regarding this strategy. I'm available 24 hours in our chat room. Okay, you can ask me anything you want. And if you want to join our premium section, you can join in the members chat room. We will assist you. We will give you one-on-one sessions. We give you trading assistance there as well. Thank you for your time. Take care.